So today I want to chat about Toronto's crumbling new condo market, all sorts of stories of and buyers, investors who are being sued by builders, other stories of investors who are getting preferential mortgages through blanket appraisals. What is happening? What are some of the dynamics? That's what I want to really chat about today. And I'm going to focus on a couple of stories over the past couple of weeks from the Toronto Star that unpacked some of these things we're seeing. The first one, maybe about a couple of weeks ago, was published. And the big headline was that an investor was being sued for $860,000 by the builder. That's roughly what he paid to purchase his pre-construction condo, but can't get a mortgage. And many of the people in this story were people who just don't qualify, do not have the means to actually get a mortgage on a property. They didn't have the means to get one back then, and they had no intention of even owning the property. Their realtors just promised them that you just flip the condo before it closes. You don't have to worry about getting a mortgage. This is, I mean, peak speculation, of course, when you have people who don't qualify buying properties just to flip them. So when this story came out in the Star, they reached out, asked me to write an op-ed in their paper, just unpacking my thoughts on how we got here, what maybe could have been done to avoid this. And I share that piece. I'll share a link to both that piece and the op-ed below. And I think it's important to rewind the clock 4 or 5 years to think about what the market was like back at that time. And back at that time, I mean, it was pure speculation. Everyone who was buying pre-construction condos, the difference between pre-con and resale was significant. And we had a lot of people coming to us asking us to buy, and a lot of times I would just sit down and say, okay, fine, we can help you buy a pre-construction condo if you want one. But I have two questions. Number one is, why are you paying $1 million for this pre-construction condo when you can get a very similar newly built one across the street for 700 grand? Like, walk me through that thinking. And I think most people were kind of surprised because they just want to be sold a pre-construction condo. But at the end of the day, I mean, I tend to think our job is to highlight the risks that maybe some people don't know about and aren't thinking about. And, the answer a lot of times was that they just didn't want to own it. They just want to just park their money, make a quick profit. They don't want to be a landlord. They don't want to be able to managing tenants, all that stuff. They would just want to buy a pre-construction condo for $1 million rather than an existing unit for 700,000 because they just think in 4 years they're just going to make an easy $100,000 or $200,000. And the follow-up question, of course, is, well, given that there's such a big spread between new condos and existing condos, for that bets to pay off, for you to make $100,000, $200,000, condo prices have to be going up more than 10% per year for 5 years in a row. And what are the odds of that happening? And that was sort of the follow-up. It's like you have to think about the risk reward. If that doesn't happen, you're not making money. If the growth is actually much lower, 1 or 2%, you're going to be down hundreds of thousands of dollars. I mean, it's just when you looked at the risk relative to the potential reward, it didn't make sense. And in many cases, I mean, I had a client last week who just emailed me to thank me for not buying a pre-construction condo in 2021, taking my advice. I mean, and it's not I even told people not to buy. I mean, I can't predict the future. I didn't anticipate what was going to happen today. But it's just like a simple looking at the numbers that the risk reward didn't really make sense. So none of our clients ended up buying pre-construction condos for many of these reasons, because when you showed them the risks, it kind of starts to make sense, and they decide that it's probably not worth it after all. But a lot of investors did. A lot of people got in. They just thought condo price would be going up forever. They just thought they could flip them before completion. This was the speculative mindset at the time. And well, how did we get to that point? It didn't happen overnight. I mean, this is a long progression that, quite frankly, started in the 90s when the federal government just stopped prioritizing building rental housing. And eventually, over time, the rental supply gap got filled by mom and pop investors buying condominiums, which worked for a little while, and then gradually over time, that momentum, that desire to invest in housing, people seeing it as this cash cow, as this get rich quick scheme, eventually things accelerate. And eventually you just hit this point where the exuberance, the expectations, the mindset take it to their own life and push prices significantly higher than they should be. And that's exactly what happened in 2021. Prices got pushed up so much higher than they should be because this is what investors will pay. They weren't really constrained by income the way the average home buyer was. They were just putting down deposits. They were driven by speculation. And pre-construction condo prices, despite what the building industry, I don't know, are saying, it's not driven by taxes, all these other things. The prices that units sell for are driven by the max price buyers will pay. So if they're paying $1,500, $1,600, $1,700 per square foot, this is what drives what builders are willing to pay for when they're looking at buying land, this expectation of what the highest bidder is willing to pay for units when they're selling them. So things got, of course, way heated. Prices reached this unbelievable level. And fast forward 4 years, resale prices have not gone up. So you have this massive gap between what those new condos were paid for versus what they're worth today. And many people are defaulting. And as I mentioned in my op-ed, I was for years, I mean, anyone who's followed me on this channel or on Twitter, where I've been writing a lot longer and on our blog, movesmartly.com, I've long been arguing against a housing market that is driven by the investment and speculative needs of mom and pop investors. It is a terrible way to build housing. It inflates prices higher than they should be. It makes it harder for younger families to get in, and that's condos and low-rise. Many of our low-rise semi-detached homes, detached homes, and townhouses are also driven by the speculative needs and investment needs of investors. And it is a terrible way to prioritize housing supply. And yet these are the ideas that economists and government policymakers were pushing. And every time I would argue against this dynamic, I get lectures about the free market, and the free market knows best and knows how to allocate resources and capital, and don't interfere with the free market. It's just a supply problem. It doesn't matter who buys homes. It's just supply. And these are the narratives that were going for years. And here's the challenge right now. There's a ton of course, we're seeing today, hypocrisy in these free market just supply narratives, because today, as I said, many of the units are not worth what investors paid for them. So they paid $1 million for a unit that's only worth $750,000. What are some banks doing? Well, if people have a decent job and would normally qualify for a mortgage, the challenge is in that with that big of a price decline, normally these investors would have to come up with an extra $150,000, $200,000 to cover the loss in value in order to actually get a mortgage. But what they're doing today, what banks are basically doing today, is pretending that the property is worth what the investor paid for. So even though that $1 million condo is worth $750,000 and they've put down, say, a $200,000 deposit, the banks are kind of pretending that it's really worth $1 million. So the investor doesn't have to come up with more money. And they're basically getting an $800,000 mortgage for a property that's only worth $800,000 or $750,000. So basically 100% loan to value ratio. This is, and what looks like is happening now is our federal government's decision to increase the premium on CMHCs. The max limit used to be $1 million. It was pushed up to $1.5 million. Is a way for banks to offload this risk to our government. And of course, investors don't qualify technically, but every investor that's buying a pre-construction condo says that they're going to live in it. And many of them do that because they want to get the HST rebate. So, and they're going to get preferential mortgage rates if they say they're living in it. So the whole industry turns a blind eye to this to prop up the market. And now what we have, when banks and our government are turning a blind eye and basically allowing banks to qualify these mortgages that what investors paid for them, it is effectively like our government and banks bailing out the new construction condo industry. In a free market, there is no bailout. If the people can't get a mortgage, they default, prices fall, things neutralize, things go back to maybe where they should be. But today, it's very clear we have an economic and political system that does not truly prioritize free markets. They say that when the markets are booming. But the second there is a signal that prices might fall, we have massive intervention to keep prices as elevated as possible to avoid price declines. And again, this is not to protect the investor. This is not, banks and government really concerned about the mom and pop investor. They're worried about the bank's loan because the banks are financing the construction on these projects, and they're worried about the rest of their portfolio, the rest of their loans. They want to keep prices elevated. They don't want to see prices decline. So I think it's important to be mindful that we have a economic system here that really prioritizes housing as an investment and will do anything to prop it up. And I think these are some of the problems that I've been highlighting on this show, on our blog for years. And I think it's a problem. And again, you have all the free market advocates saying, let the free market sort itself. But again, we're seeing the hypocrisy today. It's not a free market. The same free market advocates are supportive of banks and our government bailing out our entire housing market today. The same free market advocates are begging for the bank to give them super discounted mortgage rates to finance new rental construction, effectively socialized mortgages to finance new housing. Again, this is, of course, everyone talks about being a free market, but they're fine with socialized programs when they benefit from them, right? But if the government interventions benefit the end user, they cry foul. They're completely against any programs, any interventions that prioritize end users over investors or builders. And I think this is one of the problems I think we have in our system in Canada. And I think it's one of the reasons why the next generation is getting shut out of home ownership. It's not supply. These are like nonsense arguments. We're building housing. We're just not building housing that's affordable to young people. The reason, and again, I think a lot of builders and a lot of housing advocates are like, no young family wants to buy a pre-construction condo. This is complete BS. It's like these people have never traveled to other countries where families own condos, where other cities build family-sized condos. The difference with Canada is you have families competing with investors that are willing to pay 40% more than resale. Of course, no family is going to do that. The reason families don't want to buy a stupid condo or pre-construction condo is because they can't compete with someone who's paying 40% more than retail. Again, it is a broken system. The prices are set by the people who have the most capital who are willing to pay the highest price. So when you have that system, it prioritizes the needs of what those people want to buy, which are tiny 500 square foot condos. So families have largely been shut out of urban centers, even though in many other cities they prioritize that. In Canada, we thought, it's not necessary. Let's just build little shoeboxes in the sky because that's what's most profitable to investors. This is a smart way to build housing. Again, it's a system that I think it's broken. It has not just shut out people out of owning a home. It has screwed up our country's entire productivity. We're one of the least productive countries in the OECD. I think second last, largely because Canadians do not really invest in business. They just park their money in houses. And I think it's a massive problem. I think we need significant change in the future to change this direction. In the next maybe couple of weeks, I'm going to be sharing a video I think that really unpacks how we got here from a different lens, not this just, it's cities shutting people out, cities restricting supply. I tend to not believe these narratives as much as the economists are selling them and our governments are selling them. I don't think that's exactly what's happening. So I'm going to be sharing my thoughts on how we got here, and I think how we change this direction to prioritize houses for people who are going to live in them, especially owner-occupied homes and condos, for families, for households who are going to live in them, rather than just using them as this get-rich-quick scheme, because we're seeing the negative side effects today. The condo market has collapsed. Every economist and government person are blaming high taxes on slumping new construction sales, which is the biggest BS argument you're going to hear. Because if you think about it, what happened in 2021, no one was blaming taxes, which at the time were not that different from what they are, for a slumping condo market, because condo prices were booming. Condo demand was booming. Taxes on new housing are not new. What has happened is the price that normal people are willing to pay has normalized. And the price that investors need to sell at has not, because they need a certain price. So yeah, maybe the government has a role in reducing them in the short term, but taxes did not cause this crisis. This crisis now in new housing was caused because we encourage speculation as a country. Our government, our top economists thought speculative buying is the best way to build housing, and we're seeing the negative side effects to that. And yes, governments could have done something to avoid that, but we didn't in Canada. I did some work for a government in Dubai in 2017 because they had a speculative bubble during the global financial crisis, and they had put in measures to curb that going forward to avoid sort of those negative shocks of a speculative condo bubble. They were more mindful of these negative side effects. Canada doesn't really care. Canada thought this was a great way to build homes, having this speculative condo bubble. And I think it's a problem. I think this is kind of what needs to change in this country if we're going to have, again, a generation that could potentially get into the housing market and afford a home of their own, and a country that will eventually be a little bit more productive investing in businesses rather than parking their money in pre-construction condos. I think that is the path forward. And as I said, I'll share some more thoughts on that in the weeks ahead, hopefully. If you have any questions, please post them in the comments below or shoot me an email at askjohn@movesmartly.com.